Everyone, in this video, let's discuss about SA 705. Okay, modification to the opinion in the independent auditor's report. So, modification to the opinion in the independent auditor's report. So, let's understand the scope of this essay. It deals with how the form and content of the auditor's report is affected when the auditor expresses a modified opinion. Whenever an auditor expresses a modified opinion, say it be an qualified, adverse, or disclaimer of opinion, how is the form and content of the auditor's reports going to get affected? It also deals with the auditor's responsibility to issue an appropriate report in circumstances when, in forming an opinion in accordance with SE 700, the auditor concludes modification to auditor's opinion on the financial statement is necessary. Whenever an auditor concludes a modification to the opinion is necessary, what are steps to be followed and what is the auditor's responsibility in dealing with such modification has been laid down in this standard. So let's discuss. Okay. In all cases, the reporting requirements in essay 700 apply and are not repeated in this essay unless they are explicitly addressed or amended by the requirements of this essay. So essay 700 will be the base, and wherever there are any changes or amendments to be made, that alone is addressed by the standard. Now, let's understand the types of modified opinion. This essay establishes types of modified opinion, namely qualified, adverse, and disclaimer of opinion. Regarding which type of modified opinion is appropriate depends upon the nature of the matter giving rise to modification, whether the financial statement is materially misstated or, in the case of inability to obtain sufficient appropriate audit evidence, materially misstated. Whether based on the evidence obtained, I find that there is a material misstatement, or I'm not able to obtain a material misstatement. I'm not able to obtain sufficient appropriate audit evidence, that I presume that there could be a misstatement. Because of that, the auditor's judgment about the pervasiveness of the effects or possible effects of the matters on the financial statement. See, whenever I'm able to obtain this audit evidence, then I will be able to check whether the material misstatement has a pervasive effect. That is known as effect. Whenever I'm not able to obtain sufficient appropriate audit evidence, or the inability to obtain sufficient appropriate audit evidence, I will not be able to verify whether it is pervasive or not. That's when it is known as possible effects on the of the matter on the financial statement. Okay, let's see what is given here. Yeah, qualified opinion. The auditor having obtained sufficient appropriate audit evidence, the material misstatements are material but not permissive. Material but not pervasive. Qualified opinion. Adverse opinion. The auditor having obtained sufficient appropriate audit evidence concludes the misstatements individually or in aggregate are both material and pervasive. Disclaimer of opinion. When the auditor is able to obtain sufficient appropriate audit evidence and he concludes the possible effects on the financial statements of the undeducted misstatement could be material and pervasive. So see, if it is material but not pervasive, even though I've obtained audit evidence or not, then it will be known as qualified opinion. Okay. When I've obtained the audit evidence and I feel the effect of material misstatement would be material and pervasive, then it will be an adverse opinion. When I am unable to obtain sufficient appropriate audit evidence, I presume that, or I conclude that the possible effects of the misstatements could be material and pervasive, then it would be disclaimer of opinion. So let's move on. Objective. The objective of the auditor is to express a clearly and modified opinion on the financial statement that is necessary when the auditor concludes based on audit evidence obtained the financial statement as a whole are not free from material misstatement. Generally, it will be free from material misstatement, but here it is not free from material misstatement. The auditor is able to obtain sufficient appropriate audit evidence to conclude the statement as a whole are free from material misstatement. He is unable to obtain sufficient appropriate audit. Auditor concludes that there are material misstatements, then it will be a modified opinion. Now let's understand the key terms. Pervasive, a term used in the context of misstatement to describe the effects on the financial statements of the misstatements or possible effects on the financial statement of the misstatements, if any, that are undeducted due to the inability to obtain pervasive effects on the financial statement are those that in the auditor's accounts or items of the financial statement, if so, represent or could represent a substantial portion of financial statement in relation to disclosure are fundamental to users' understanding of the financial statement. See, pervasive effects are those which are not confined to specific elements, and then it is not, if so confined, it represents substantial portion of the financial statement in relation to disclosure are fundamental to user understanding of the financial statement. Let's understand a balance sheet. Okay, we have equity and liabilities, and on the asset side only there are two things. Let's understand three things. Okay, inventory, debtors, and cash. Another cash. Okay, only these three things are there. Okay, um, let's understand there was only a trading business, so there is no big fixed asset also. Okay, only these three things are there, and there is inventory will is forming part percent of the total assets. Okay, now there is a misstatement which is material in the inventory. Even though it is confined to specific elements, it is representing a substantial portion of the financial statement. That's why it will be known as pervasive. Okay. Modified opinion, a qualified opinion, adverse opinion, or disclaimer of opinion, all these combinedly it will be known as modified opinion. Now, this we have discussed, right? Object of the auditor to clearly express an appropriately modified opinion on the financial statements. Now, circumstances when a modification to the auditor's opinion is required, the auditor shall modify the opinion in the auditor's report when the auditor concludes, based on the audit evidence obtained, the financial statement as a whole are not free from material misstatement. The auditor is unable to obtain sufficient appropriate audit evidence to conclude that the financial statement as a whole are free from material misstatement. So let's understand each of the. First is qualified opinion. He has obtained sufficient appropriate audit evidence and concludes a misstatement, a material but not pervasive. He is unable to obtain sufficient appropriate audit evidence to base his opinion, but he concludes not pervasive. That's when he will issue a qualified opinion. He has obtained sufficient appropriate audit evidence and he concludes that the effects of the misstatement could be material but not pervasive, and he is unable to obtain sufficient appropriate audit evidence, and he concludes the possible effects could be material but not pervasive. Now, adverse opinion is where he has obtained sufficient appropriate audit evidence and he concludes the effect of the misstatement is both material and pervasive. Disclaimer is when unable to obtain sufficient appropriate audit evidence on which to base his opinion, the auditor concludes the possible effects is material and pervasive. Okay, see, which means I have not obtained any audit evidence which could support that it is an unmodified opinion. Okay, so I conclude that there could be a material misstatement which is also pervasive. Okay, that's when I will say I am disclaiming an opinion, which means I'm not responsible for this opinion. Like we used to have disclaimers, right? Which means we are not quite responsible. That's where I'm not able to obtain audit evidence, and that's why I'm not taking responsibility for this audit. Okay. Now, consequence of inability to obtain sufficient appropriate audit evidence to the management impose limitation after the auditor has accepted the engagement. If it is before the audit acceptance, then what would have the auditor done? The auditor would have either withdrawn from the engagement or discuss with the management and make himself clear that there is a valid side from their side. Okay. Now, if after accepting the audit engagement, the auditor becomes aware the management has imposed the limitation on scope of the audit, the auditor considers the likely to result in the need to express a qualified opinion or to disclaim an opinion on the financial statement. The auditor shall request the management to remove the limitation. If management refuses to remove the limitations, the auditor shall communicate the matter to those charged with governance unless all those charged with governance are involved in managing the entity and determine whether it is to obtain sufficient appropriate audit evidence. So he has to request or he has to check with the management to remove the limitation. And if the management does not do it, he has to communicate it with TCWG unless all the TCWG is involved in managing the entity, and he has to determine whether he can perform any other alternative procedures. If the auditor is unable to obtain sufficient appropriate audit evidence, the auditor shall determine the implications as follows. He concludes the possible effects on the financial statements could be material but not pervasive, then he has to issue a qualified opinion. If he concludes impossible effects are both material and pervasive, so the qualification would be inadequate, then he should withdraw from the audit. If withdrawal before the audit is not practicable, he should disclaim. So he has two alternatives here. When before issuing disclaimer of opinion, he should withdraw or he has to disclaim more of opinion. Okay, now if the auditor withdraws Before withdrawing, the auditor shall communicate with, to such with governance, any matters regarding the misstatements identified during the audit that would have given rise to modification to opinion. Whatever the matter that has given rise to modification to opinion, before withdrawing, he has to communicate it with those charged with governance. Now, let's see here. Right? Circumstances. The auditor concludes that based on audit evidence, obtained the financial statements as a whole are not free from material misstatement. The auditor is unable to obtain sufficient conclude that the financial statement as a whole are free from material misstatement. Management impose limitation. Request the management to remove the limitation. If the management refuses to remove the limitation, communicate with TCWG and perform alternative procedures. Still unable to obtain appropriate audit evidence. Possible effects material but not pervasive. Then give a qualified opinion. Possible effects both material and pervasive. Then withdraw from the engagement or give disclaimer of opinion. Okay. Now, let's move on. Other consideration relating to adverse opinion or disclaimer of opinion. When the auditor considers it necessary to express an adverse opinion or disclaimer of opinion on the financial statement as a whole, the auditor's report shall not include an unmodified opinion with respect to the same financial reporting framework on single financial statement or one or more specific elements. To include the unmodified opinion, same report in circumstances would contradict the adverse opinion or disclaimer of opinion on the financial statement as a whole, which means whenever I'm giving an adverse opinion or say qualified opinion or disclaimer of opinion, I should not include something which is opinion. Now, qualified opinion. See, the auditor shall state in the auditor's opinion, except for the effects of cases of qualified opinion section. When reporting in accordance with the fair presentation framework, the accompanying financial statements present fairly in all material respect or give true and fair view in accordance with the applicable financial statements framework. The accompanying financial statement prepared in all material respects in accordance with. When the modification arises from the inability to obtain sufficient appropriate evidence, he should word it as except for the possible effect of. So whenever it's an inability, then he should make it as possible. Now, adverse opinion. He should state, because of the significance of the matter described on the basis of adverse opinion section, fair presentation framework, you say, do not present fairly, do not give a true and fair view. Okay, or it could be in compliance framework, in or have not been prepared in material respect in accordance with the applicable financial reporting framework. Now, disclaimer of opinion. Disclaims an opinion due to inability to obtain sufficient appropriate audit evidence. The auditor shall state the auditor does not express an opinion because he's not going to. This is a disclaimer. I'm not going to express an opinion. State that because of the significance of the matter described in the basis of the disclaimer of opinion section, the auditor has not been able to obtain sufficient appropriate audit evidence to provide basis for the audit opinion on the financial statement. Amend the statement as required by SA 700, which indicates the financial statements have been audited to state the auditor was engaged to audit the financial statements. See, let's have an example. Let's go to the end. See, disclaimer of opinion. We were engaged to audit the financial statement. Generally, what it will be? Here. You will have the qualified opinion. We'll see here. We have audited the accompanying financial statement, but for the disclaimer of opinion, we will say we were engaged to audit the financial statement of ABC Associates, which comprise the balance sheet, the statement of profit, statement of cash flows, the notes to financial statement, including summary of significant accounting policies. We do not express an opinion on the accompanying financial statement of the entity because of the significance of the matter. The basis of disclaimer section of our report, we have not been able to obtain sufficient appropriate audit evidence to provide a basis for the audit opinion on these financial statement. So what is to be discussed in our basis for disclaimer of opinion? Say we were not appointed as auditors of the company until 31st March 2021, and thus see this is a reason why I'm going to disclaim an opinion. So this differs from company to company from each audit report. Okay, but the above is a common format. Okay. See, and thus did not observe the counting of physical inventory at the beginning of and the end of the year. We were unable to satisfy ourselves with alternative means considering the inventory quantities which were said in the balance sheet. In addition, the introduction of new computerized accounts receivable system resulted in numerous errors in the account of a report. The management is still in the process of rectifying the system deficiencies and correcting the errors. We were unable to confirm Verify validate a means of accounts receivable including the balance sheet and the total amount. As a result of these matters, we were unable to determine whether any adjustments might have been found necessary in respect to the record or unrecorded inventories and accounts receivable and the elements making up the statement of profit and loss and the cash flow. So this is the basis why I am giving a disclaimer of opinion. So let's go back. Yeah. So based off opinion we have discussed, right? Now, see, if there is a material misstatement that relates to a non-disclosure of an information required to be disclosed, the auditor shall discuss the non-disclosure with the TCWG and describe the same on the basis of opinion paragraph and unless prohibited by law or regulation, include the omitted disclosure provided it is practicable to do so. The auditor has obtained sufficient appropriate audit evidence about the omitted information. Now, when an auditor disclaims an opinion, he shall not include the elements. Which are the elements? Reference to auditor's report where the auditor's responsibility is described and statement about whether the evidence obtained is sufficient appropriate to provide a basis for the auditor's opinion, because I'm not taking the responsibility to give an opinion. So that's why I'm not showing the giving reference to the auditor's responsibility section of our report. And see, I'm not obtained any audit evidence, or I have not obtained sufficient appropriate audit evidence. That's why I'm not giving the statement that I've obtained sufficient appropriate audit evidence. Description of auditor's responsibility for the audit of the financial statements when the auditor disclaims an opinion on the financial statement. What is the thing to be given in the auditor's responsibility paragraph? When an auditor disclaims an opinion on the financial statement due to the inability to obtain sufficient appropriate audit evidence, the auditor shall amend the description of the auditor's responsibility required by paragraph to include only the following. One of these things to be included in the auditor's responsibility paragraph. A statement that the auditor's responsibility is to conduct an audit of the entity's financial statement in accordance with the standards on auditing and to issue an auditor's report. A statement that, however, because of the matters described on the basis of disclaimer of opinion section, the auditor was unable to obtain sufficient appropriate audit evidence to provide a basis for the audit opinion on the financial statement. A statement about the auditor's independence and other ethical responsibilities required. Considerations when the auditor disclaims an opinion on the financial statement. Unless required by law or regulation, when the auditor disclaims an opinion on the financial statement, the auditor's report shall not include a key audit plan. A key audit plan is only when I am going to make some or implement some audit procedures and get its results. See, I am not creating audit evidence, so I am. That's why I'm not giving anything as a key audit matter, because I'm not taking the responsibility of an audit for this financial statement. Now, table which we have already seen, right? Many of us would have been remembering this one, right? Material but not pervasive. See, first, financial statements are material misstated, okay? And inability to obtain sufficient appropriate audit evidence. If it is material but not pervasive, in both the cases, qualified opinion. Material but not pervasive, qualified opinion. Material but pervasive, and I have obtained the audit evidence, then it will be adverse opinion. I'm unable to obtain sufficient appropriate audit evidence, then it will be a disclaimer of opinion. So this is very important, okay? Now, a material statement, why it could be there? It could be there because of the accounting policies or application of accounting policies and appropriateness of the disclosures. In relation to the appropriateness of policies, management of selected material statement may arise from are not consistent with AFRF or does not represent the underlying transactions. And then application of selected accounting policies. When the management does not apply the selected accounting policy consistently or due to the method of application of selective accounting policies, I have made accounting policies applied only for certain items and not for the all items. Appropriateness or adequacy of disclosures in the financial statement. The financial statement do not include all the disclosures, or the disclosures in the financial statement are not presented as per AFRF. The financial statement do not provide the disclosure itself. Okay, I don't have all the completeness is the first issue, right? I don't have I've not included all the disclosure which is necessary. Okay, or I've not presented like in a format which has been suggested by the AFRF, okay, or I'm not given the disclosure at all for the adequacy of disclosure. Nature of an inability to obtain sufficient appropriate audit evidence. Circumstances. One is the circumstances beyond the control of the entity, okay, leading to the nature and timing of auditor's work and limitations imposed by the management. So first one is circumstances beyond the control of the entity. Examples could be accounting records have been destroyed by fire or some hurricane or something flood has come. That's why the accounting records have been destroyed. And the accounting records of a significant component have been seized indefinitely by the governmental authorities. That could be the cases where it is beyond the control of the entity. Second one would be relative to nature and timings of this work. The one which we had, right? The inventories have been appointed after the beginning and the end inventory count. And it is required to use the equity method of accounting for an associated entity, and the auditor is unable to obtain sufficient appropriate audit evidence about the latest financial information to evaluate whether the equity method has been appropriately applied. Timing of the auditor's appointment. That performing substantive procedure alone is not sufficient, but the entity's control are not effective. Examples when the inability of evidence arising from a limitation on the scope of audit imposed by the management include when management prevents the auditor from observing accounting. Management have appointed me, but is preventing me from observing the inventory test count. Okay, management prevents the auditor from requesting the external confirmation. Determining type of modification to the auditor's opinion. See, consequence of inability to obtain sufficient appropriate audit evidence. The practicality of withdrawing from the audit may depend on the stage of completion. Okay, if the auditor substantially completed the auditor may decide to complete the audit to the extent possible, disclaim an opinion, explain the scope of limitation with the basis of disclaimer opinion prior to withdrawing. Okay, um, because in some cases, will be a withdrawal of the audit may not be possible if the auditor is required by law or regulation to continue the audit engagement. Now, other consideration relating to adverse or disclaimer of opinion. The expression of an unmodified opinion prepared on the given a financial reporting framework, and within the same report, the expression of adverse opinion in the same financial statement or a different financial reporting framework. See, it's an example that would not contradict. Okay, we discussed that if I'm going to give an adverse opinion or disclaimer of opinion, I should not include those matters which may make the users feel that it's giving a unmodified opinion. But here are the cases where it is okay to give an unmodified and adverse opinion together. When unmodified opinion is for one financial reporting framework and modified opinion is for other financial reporting framework. Disclaimer of opinion regarding the results of operations and cash flow where relevant, and unmodified opinion regarding the financial position. In this case, the auditor has not expressed a disclaimer opinion on the financial statement as a whole, which means, see, I'm saying there is a going concern issue, which is like disclaimer of opinion, okay? And unmodified opinion will be the balance sheet, okay? That's where. Then list all our formats. Okay, so this with this complete SC705. I hope you find this useful. If you really find it useful, please do like, share, and subscribe. And thank you.